not a whole lot of movement these past couple of days. We've been pretty flat, even on the week. Despite that massive rally on the Moderna news on Monday, we started the week at 29.40 on the S&P, finished the week at 29.55. It's not a whole lot of movement up. Yes, there was some volatility in there. We started that first day pretty strong on the rally. Then we had that quick sell-off at the end of Tuesday when people were questioning the importance and the value of the Moderna vaccine news. And then since then, it's kind of just been a whole lot of this. Even though there's a lot of uncertainty going around in Hong Kong and China right now, it doesn't seem to phase the market, And it's kind of been this way for the past several weeks. Yes, we've seen a lot of chop in there, but overall, it's been a pretty flat market the past couple of weeks. And I think that's going to continue until there is, positive reopening news, positive economic data, and we're talking facts here, then things are going to start going up again. So it looks like on the downside is anytime there's a dip, people want to get in. People want to buy. There's a lot of people who feel uninvested. There's a Bank of America statistic that people have the highest levels of cash they've had since 2005, which is when they started recording that statistic. So people with cash don't want to have cash because cash loses value 2% about every year, maybe a little bit more in times like these where there's a lot more printing of money. And equity is a pretty good place to invest. Usually it's over half of people's portfolios, but for younger people, more than half. Older people, maybe 40, 20%. So it looks like people are going to continue to buy, and that's going to give us a floor. That said, people are very cautious, so that's also giving us a ceiling. And it looks like that ceiling is a 200 moving day average on the S&P 500, about 29.90. That's kind of what we haven't been able to break. We obviously broke it on the downside aggressively. We just kind of shot through that on the big crash. But in the recovery from the crash, we haven't gotten to we haven't broke through that 200-day moving average. We kind of just been touching it, but nobody wants to be buying at those levels. I don't want to be buying at those levels. I'm barely buying right now. I've got a little bit of cash. I'm barely buying. I'm putting in these limit orders on stocks that are declining that I want as a long-term holds, and they're not even filling. I tried to get some CAT at 109 today. Wasn't getting CAT at 109. Let's see, what did it close at? Closed at 112. I was putting that order in when it was in the 111s-ish. So, it's kind of like when a good price comes around, it's not around for a long time these days. That said, no price is getting out there expensive. Really, not a whole lot seems expensive. FANG seems expensive a little bit. And that explains why we're seeing the equal-weighted S&P 500 outperform the overall S&P 500, cap-weighted S&P 500 for this week. People are trying to look for value. They're trying to look for stocks that haven't really seen their growth. And if you look at any of the charts, like Apple, Amazon, Microsoft, they're back near all-time highs. Some of them are. Amazon is hitting all-time highs. Same thing with Netflix. So those larger companies don't seem to be presenting as much growth and value opportunity, and the smaller companies seem to be having that kind of opportunity. So it seems like that's the area of the market that's starting to catch up to reality a little bit and approach fair value. That said, I think overall the market feels pretty fair value. Doesn't seem like I'm seeing any good deals that I'm like, I have to pounce on. There's one or two that I like that I have been buying, but they do pose a little bit of risk. So maybe we're getting the good deals because they got the risk involved. A couple that, if you factor in the risk, are good deals. So it seems like we're at fair value right now, and we've been at fair value for a couple weeks. We might stay at fair value for a couple more weeks. It's kind of how I'm just thinking about it. There's going to be interim chop. There's going to be things here and there that we like and that we don't like, and that's going to lead to volatility, but we're not breaking through the 200-day moving average. We just kind of had the best news we've ever had. New York City's opening up. Everything's opening up. Data out of Germany is looking pretty good. Starbucks, 80% of year-on-year revenues. There's reasons for the bulls to go a little out there and for the bulls really to make hardcore moves, but they're not making any hardcore moves. It's like everyone's kind of tempered and complacent and realistic here at the fair value range. So I'm very happy at this fair value range. I kind of hope we stay right where we're at. And it's healthy. It's a very healthy market right now, despite what it was just a few weeks ago and despite just the current conditions. Feels like a very, very healthy market. Now, that's all dependent on the reopenings. The reopenings have to occur. We have to be getting outside, returning to normal everyday life. And if that happens, all this is justified. Everything will be, normal, and we'll see what happens. So we're obviously playing it day by day, seeing how the virus situation handles itself. But overall, fair value. I wouldn't be afraid to buy here. If you've had big gains, wouldn't be afraid to sell, although I'm not really doing that. And if you see a dip, take advantage of it because the fundamentals are pretty strong. And unless those change, which you will know about via the Instagram story and via these videos, we're just going to kind of go with the wind, putting our sails up. Hopefully no hurricanes come. So have a good weekend, and until next time, peace.